A key theme in the marketplace is how companies will repay their shareholders. There's a lot of cash on the balance sheets, are looking better than ever. We're seeing companies increase share buybacks and investing in key growth areas to add more verticals to the balance sheets. One of the most important themes are dividends, and we're very proud at TheStreet to introduce a new product, Dividend Stock Advisor, with David Peltier.
Great, thank you for having me. Really looking forward to this product. Dividends are a key part of the market. Over time, in the S&P 500, about half of the gains over the last century have come through dividends. And our focus here is really through our model portfolio, we're looking for stocks that yield more than the S&P 500. So we're looking for an average yield of about 3%. But most importantly, not just the size of the yield, but the fact that these companies have strong financials, solid earnings that can sustain dividend growth consistently over the years.
So your methodology is very specific. Let's walk through that a little bit more and also explain what the difference is between having a high yield and actually having a good stock.
Sure. When I look for a dividend stock, I want to see a stock that the dividend yield is at the high end of the industry range. We have a very diversified portfolio, anything from financials to consumer names, even a couple of technology stocks. You and I both know technology companies pay a lot more in dividends than they did just 10 years ago.
And is there one sector that you're skewed to more, almost as an overall market theme?
I think one area where you're starting to see more dividends. Historically, the financials, banks have always paid dividends, but we saw in the financial crisis a few years ago, the government wasn't letting these companies pay dividends. So I think you're seeing some companies like BB&T and Wells Fargo were starting to raise their dividends once again. So I think you'll see the financials once again be the king of the dividends.
Let's look at a very specific scenario. Let's take a look at Verizon, AT&T, and how you could potentially capture some exposure to Apple. We might not like Apple from a fundamental perspective, and we also think it's still even a little bit toppy on the charts, but you still want some of that product affiliation. How would you look at a Verizon and an AT&T to get that exposure?
Sure. Well, there's no doubt that AT&T and Verizon are two clear industry leaders. Both of these stocks have very high yields, but right now one of the reasons I chose AT&T for the Dividend Stock Advisor is because A, it's higher yield. Currently the stock's yielding 5.1%. That's about 50 basis points higher than what Verizon's offering. But also, like you said, they do have good exposure to Apple. Even if Apple's slowing, it's still a key part of the smartphone market. People are still buying smartphones. Both of these companies will both see smartphone growth in 2013. And when you look at the sales breakdown, right now about 75% of AT&T's smartphones are the iPhone, just compared to 55% for Verizon. But aside from that, what I like at Ma Bell best is the consistent dividend growth. 29 consecutive years. They raised the dividend back in November. Verizon can't boast that kind of growth. They've had to maintain their dividend, not been able to raise it every single year. That consistency is why I think AT&T will be rewarded over the coming quarters.
And finally, how long do you expect to hold a position? Is there a specific time parameter involved, or are there fundamentals that you're looking for?
Well, you can't say forever, but compared to a lot of our other trading portfolios out there, we definitely have a longer-term outlook for these stocks. Similar to your retirement account, I think these are stocks that need to be revisited maybe once a quarter, as opposed to 3 times a day, like we do with the Stocks Under 10 portfolio or Action Alerts Plus. But again, it's what I'm looking for is that consistent growth. If that story changes, my holding period may go from a couple years to a couple months.
This is a really exciting product, especially since you're one of my favorite stock pickers at TheStreet. And of course, in addition to your subscription, you can follow David and his dividend picks at Dividends Guru on Twitter.